Alright guys, I'm going to talk about bread and butter trading setup, which was developed by a legendary trader, Joe DiNapoli. So I will take you to the chart and I will show you how you can identify bread and butter setup and how you can trade it. Let's go to the chart. We are on daily time frame of XAU USD, that is gold versus dollar, and there is something similar to bread and butter here. For bread and butter setup to be formed, the market should move in a direction without any choppy price action. It must clearly move with fast momentum. So you can see that this movement to the downside from this swing high to this swing low is fast enough to set up a condition for formation of a bread and butter. To identify how fast or how slow a movement is, we use 3 by 3 or 3 into 3 simple moving average. To understand what this moving average is, I will just show you the configuration of the moving average. Let's go to that moving average. You just have to keep 3 in the period, 3 in the shift. Method should be simple, apply to close, and you can keep the style according to your choice. I am keeping something bluish with 4 pixel. So I will show you with the crosshair that this is the moving average, 3 by 3 moving average line. Moving to the downside. In a downtrend, the idea is to sell after upward retracement, assuming that the market will continue falling according to the previous well-established trend. So this was the movement, that is the main trend, this is the retracement, this is the continuation. And the retracement to the upside can be gradual. To understand how gradual it can be, we have to see that whether this price is going to the upside, closing above, closing below, and again closing above or not. So it started going to the upside in the later part of March 23rd, then it made a bullish candle on March 24th, again a bullish candle on March 25th. However, this candle could not close above this simple moving average line. It simply touched it and it came down. For 100% accurate bread and butter setup, this upward movement should have happened in such a way that this candle of March 25th could close above this. If it closed above this, then it could have been 100% accurate. For understanding, let's assume that this March 25th candle was closed above this simple moving average line, and then market started going to the downside. However, it did not continue to the downside. Again, it started retracing to the upside, and then what happened? It closed back above the simple moving average line, which shows that there are high chances of upward retracement continuation. But this nature of movement shows that this is slower and gradual movement, and that's why it is going to just be just a retracement, not a reversal. Then after the retracement to almost 61.8%, not exactly, because 61.8% level is slightly higher than the swing high made here. However, this retraced to a significant level, and then it continued to the downside, and it made a significant bearish candle on March 21st, which engulfed the previous candle, and this was the opportunity to take a sell position. So this was the continuation to the downside. So the original idea is to take the position in direction of the previous trend. However, many new aggressive traders have started using the setup to trade even against the previous trend, or you can say that in the direction of retracement. For example, it fell down, it retraced to the upside, again tried to continue to the downside and did not continue further, and when it closed back above the moving average, this gives the opportunity to buy and hold the buy position with the target at 50%. That's all in short about this bread and butter pattern. Thanks for watching.